And this is the moment when real estate purchasing suddenly feels very, very real. Reservation is easy. Down payment, medyo manageable. But when the bank enters the conversation, that's when your long road to real estate ownership really begins. This is the ABCs of real estate, and letter B is for bank financing. So you reserve the unit, you secure the down payment, you are finalizing the remaining amortizations, turnover is coming, and then the developer says, "Sir, are we gonna pay in cash or bank financing?" And suddenly, all the questions in your head start. Teka, bakit yung amortization ko mas mataas sa initial computation? Why are interest rates different? And I guess the most important thing for any property buyer whose lump sum payment is due is the question of ma-approve ba ako sa bank loan? For property buyers here in the Philippines, when it's time to pay the lump sum payments, most of them still don't pay in cash. They still go through bank financing. And your bank will primarily look at three things: your income, your credit history, and your capacity to pay the loan. And for the bank, it makes perfect sense because remember, the bank is not buying the property with you. They're only lending you the money. So ayun na nga, ma-approve ka ba? Here's a simple rule of thumb. Your gross monthly income should at least be 3 times of your monthly amortization. So for example, your monthly loan payment is 30,000 pesos per month. You should be ideally earning at least 90,000 pesos gross monthly income. Otherwise, the bank might say no, or worse, they might say yes, but your lifestyle still says no. So what's the logic here? Bakit 3 times? Because given the reality of things, the bank will always assume that you always have other financial obligations to spend on. And remember interest rates, they vary, they change depending pa from one bank to another. So the monthly that you're seeing now might not be the same monthly amortization that you will be paying 5 years or 10 years down the road. So before reserving any property, think of the long term and ask these questions first. What is my estimated amortization? What will my bank loan approval look like? And can my gross monthly income comfortably cover it? Because getting approved by the developer may be easy, but with the bank, getting approved, that is something else. Again, my name is Ralph, and this is The Shortlist.